Imagine this. You've got 50 grand just sitting somewhere in your account, waiting for you to do some smart things with it. Well, check this out. What if you decided to put that cash to work by investing it in one of the top 5 Fidelity index funds? I mean, we're talking about some of the best in the game here. Even Albert Einstein, the genius himself, once said, compound interest is the 7th wonder of the world. And when that baby kicks in, you could be looking at an early retirement. Sounds pretty sweet to be right? Well, it is. Here's the deal. Fidelity's top index funds aren't just a good option, they're a strategic way to grow your money. These funds are built to help you create a diversified portfolio and generate a steady, reliable income over time. Think of it as setting your money on autopilot while it quietly does the heavy lifting for you. Now, I know there are tons of index funds out there. Seriously, it's like a buffet of choices, and it can get overwhelming. That's why in this video, we're keeping it simple and sticking to the top 5 Fidelity index funds that prove themselves over and over, the rock stars out there. We'll also break down exactly how much these funds could grow your 50K and what kind of returns you can expect over time. Let's get started. Let's start things off with the biggest one. Fidelity's most popular and heavily funded index fund. This bad boy tracks the S&P 500, which represents America's largest companies. You know, the big names we all hear about every day. Companies like Apple, Amazon, Google, all the tech titans and beyond. On the financial side, FXAIX keeps things super efficient with the expense ratio of just 0.015%. That's basically peanuts compared to the returns you're getting. And speaking of returns, this fund has been a rock star, delivering on average an annual return of 13% over the last 10 years. Now, let's put that into perspective. If you dropped 50K into this fund, by the end of year 1, it's already grown to $56,000. Stick with it for 3 years, and you're looking at over $72,000. In 5 years, around $92,000. But here's the kicker. In 10 years, that $50,000 balloons to a whopping $170,000, more than tripling your initial investment. That's the magic of exponential growth, folks. Sure, FXAIX is a beast, but it's not the only player in the game. Stick around because there are 4 more incredible Fidelity index funds that might just blow your mind. Now, let's talk about the Fidelity Total Market Index Fund, aka FSKAX, which is your ticket to owning a little piece of pretty much everything. This fund doesn't just stop at large cap companies like the S&P 500. It literally covers the entire US stock market. We're talking about over 4,000 companies, from the giants like Tesla and Microsoft to smaller up-and-coming players you probably never heard of. What makes FSKAX stand out? For starters, is its ultra-low expense ratio, which is just 0.015%. That's the same as FXAIX, meaning you get to keep more of your hard-earned gains. But here's the real appeal. This fund is all about diversification. By spreading your investment across the entire market, you're essentially balancing out the highs and lows of individual sectors. Now, let's crunch some numbers. Over the past 10 years, FSKAX has delivered an average annual return of 12.8%. So, if you invest that $50,000 today, you're looking at about $56,000 after the first year. Let it ride for 3 years, and it'll grow up to $72,000. 5 years, roughly $91,000. And in 10 years, you're sitting on about $166,000. Not too shabby for just letting your money work for you. The best part with FSKAX, though, is you're not putting all your eggs in one basket. It's a set it and forget it kind of fun that keeps getting things steady no matter what's happening in the market. Ready for more? Let's move on to the next game changer. Let's dive into FNCMX, the Fidelity NASDAQ Composite Index Fund, which, if you're into tech and innovation, this fund is a no-brainer. FNCMX tracks the NASDAQ Composite Index, giving you an exposure to over 3,000 companies, including giants like Apple, Microsoft, and Tesla, along with cutting-edge biotech firms. The expense ratio, though, is 0.29%, which is not something to freak out about. Sure, it's slightly higher than other funds we've discussed, but you're paying to access high growth sectors driving the future ahead of us. And historically, FNCMX has delivered an average annual return of 15.9% over the past decade, which in numbers, if you invest $50,000, it grows to $58,000 in 1 year, around $78,000 in 3 years, and about $104,000 in 5 years. Stick with it for 10 years, and you're looking at $219,000, more than quadrupling your initial investment. A word of caution though, because it's tech heavy, FNCMX can be more volatile than other index funds. But if you're playing the long game, it's worth riding out the ups and downs for potentially massive returns. But hold tight, there are more exciting funds to explore. Next up is FXAIX, Fidelity's game changer. What makes it special? Zero expense ratio. Yes, you heard it, zero. No fees eating into your returns, making it perfect for investors who want every dollar to work for them. FXAIX tracks the total U.S. stock market, offering exposure to large, mid, and small cap companies across all sectors. This gives you instant diversification, spreading your investment over thousands of stocks. Think of it as the ultimate all-in-one option for the U.S. market. Performance-wise, FXAIX has delivered consistent returns, averaging around 14% annually since its launch. If you drop $50,000 into this fund, it grows to $57,000 in 1 year, $74,000 in 3 years, and over $96,000 in 5 years. Keep it for a decade, and you could see your investment climb to around $185,000, more than tripling your initial input. FXAIX is especially great for beginners or cost-conscious investors looking to build wealth over time. While it doesn't have a long historical track record like some other Fidelity funds, its zero fees and solid diversification make it a strong contender. So if you're looking for a low-cost, hassle-free way to grow your portfolio, FXAIX is definitely worth considering. Let's take things global with FSPSX, Fidelity's go-to for international exposure. This fund tracks the MSCI EAFE index, covering developed markets outside the US and Canada, including countries like Japan, Germany, and the UK. Why is this important? Diversification. Investing globally spreads your risks and taps into opportunities in international markets that US-centric funds might miss. FSPSX comes with a super low expense ratio of just 0.035%, making it budget-friendly for those looking to add global investments without extra cost. Performance-wise, its average annual return sits around 5.4%, reflecting the typically slower but stable growth of developed markets. Let's run the numbers. $50K in FSPSX grows to about $53K in 1 year, $59K in 3 years, and $65K in 5 years. Over a decade, you're looking at nearly $85K, nearly doubling your initial investment while enjoying the benefits of a more diversified portfolio. If you want to hedge your bets with some international flavor and take advantage of growth outside the US, FSPSX is a solid pick. It's like giving your portfolio passport to explore new opportunities worldwide. So there you have it. We've covered some of the top Fidelity index funds that can seriously boost your investment game. Whether you're into the titans in the Fidelity 500 index fund with its steady, strong returns, or you're looking for more diversification with the Fidelity Total Market Index Fund, there's something for everyone. For those wanting a little tech-heavy action, we covered the Fidelity NASDAQ Composite Index Fund, which is another solid choice, while Fidelity Zero Total Market Index Fund offers a zero-fee way to get in on the total market action. And don't forget the international options with Fidelity International Index Fund, helping you tap into global growth beyond the US. Each of these funds has its own flavor, but they all share one thing in common. They're solid, long-term investment choices. With their low expense ratios and strong historical returns, they're designed to help your $50,000 or $100,000 grow over time. Remember, investing isn't a get-rich-quick scheme. It's about playing the long game, letting compound interest work its magic. So pick your favorites, stay consistent, and watch your money grow. Thanks for tuning in, and don't forget to hit that like and subscribe button for more financial tips.